the US inflation rates cooling off, coming down and trending in the right direction, typically leads into central banks cutting interest rates.
We're already seeing the European legislators making some big moves, giving some definition and some framework around stablecoins. Like, that's a very contentious piece. I think irregardless of what happens in the US, Bitcoin thankfully is decentralized, it's global.
Kamala Harris is sort of the nominee for the Democratic Party. She's just released her political agenda for this presidential campaign, and there is not one single mention of crypto or Bitcoin, which is a little bit concerning, but purely because crypto is definitely not a priority, and obviously we've seen the SEC go against it in a lot of cases. Hello guys, welcome back to another episode of Tapping into Crypto. My name's Ted, and
Hey Ted.
Hello Pav. I'm joined by Pav.
Sorry, I just feel like throwing you off for once.
Yeah, mate.
Usually so calm and composed, I thought, let's rattle Ted.
I appreciate it, mate. I appreciate it. You got to keep me on my toes. That's how
you were doing it for me just a minute ago. I almost forgot to record on my screen, so, we look after each other.
Well, that's it. We both make each other better. So that's what we strive to do.
Or constantly point at each other's flaws, which you could argue is the same thing.
We do a lot of that as well. Probably more of that. But look, it's all healthy here. But look, we did a gaming episode last week and it was received really well. So we might do a few more of those in future, like those deep dives. I know there's a lot of narratives that people want, like more in-depth coverage of, deep in, DeFi, the Solana ecosystem, meme coins, things like that. So we'll look to do more of those in the future. But obviously, in between, we want to give people updates on the market.
Got to keep it on top of things.
That's it.
Things are getting spicy.
So today we're going to cover the key market news, where the market could be heading. Also talking about like institutional adoption and what that really means, and are institutions actually buying crypto?
Sounds good.
Pav, kick us off with what's happening with Bitcoin.
What's happening with Bitcoin? So, not much. It's kind of like watching paint dry, to be honest. Like, we are seeing a few days where we're seeing some decent moves. Unfortunately, it has been to the up and down side. But, I mean, we're going to talk about it to a second, but it's pretty much doing what the market would expect, or even like what we've been talking about for some time. August and September can be quite months of consolidation, just chop. But hopefully there's a good end to where this is all going. But in terms of where we are sitting right now, this is a little chart we've got up on the YouTube. Come check us out if you're listening along at home. We've been in this multi-month range now from the March high all the way through to the June low. We had a nice little dip in the early parts of August, which everyone remembers, and I'm sure everyone was panicking. Mm-hmm. And we've since then continued to grind higher. So currently we're trading just above $60,000 at this point in time. And I think just to call it out, there was a big piece of news that came out last week that may or may not have sort of been heard or touched on by too many people. Just the inflation data came out in the US. Yep. Very much showing it's cooling off. Yeah. So I wouldn't be surprised if it's kind of put to bed now. Like, the whole narrative on inflation's rising, we're worried about inflation. We've had like 4 months of the data trending in the right direction. So,
it's what we like to see.
Yeah.
From a crypto perspective, it's good for us.
Yeah. Also for the consumer, you go up and fill your car up, you kind of want to see petrol prices come down. This is a big piece of the puzzle.
That's it. Groceries.
And groceries.
Hopefully getting cheaper. I suppose Woolies and Coles don't really care about that.
No, they don't. Well, you wouldn't think they would. But at the end of the day, it's good. It's looking better for our crypto markets, right? So that's a big piece of the puzzle. So we have the next interest rate meeting coming up in the middle of September. So we're not going to talk too much about it today, but that's a big piece of the puzzle as well for liquidity, which I know Ted, you're going to jump into very shortly.
Yep.
But in terms of what we have to look forward to, this is a chart we've been tracking for, I reckon like 2 years now. But Bitcoin dominance. So we're looking at all the money in the market currently, how much is currently sitting with Bitcoin. Doing a bit of analysis on this, ever since the middle of 2023, we have seen range breakouts and they've continued to move higher. We're now at a point now where it is pushing up again, making new local highs just under 60%. And we have sort of spoken about this little key level here around 64, maybe to 60%, where we could start to see Bitcoin dominance sort of top out. And this could be, as we move into this key level, it could be when we see that breakout in Bitcoin, we start to see all new time highs like we have in the past. Yeah. And obviously what we're all really interested in, us altcoin holders, is when this starts to reverse. So just calling out that the next couple of weeks might be quite pivotal in terms of moving towards this final push in Bitcoin leading the market. And next year or late this year, we might see altcoins start to get their their proper trending environment start to develop. So pretty excited for all of that. A lot of boringness in the short term, long story short. But, I mean, we're building the base of, in my opinion, of where things are going next, which is exciting.
Cool. Yeah, to put that sort of in the layman's terms, it's like Bitcoin's going to run first. It's going to have its...
Historically speaking, but it should be.
And typically we look at the historical impact. Bitcoin will run first, and then altcoins will run following that. So Bitcoin's dominance on the market becomes less. It doesn't mean it's coming down in price necessarily. No. It just means altcoins are starting to have their run.
That's right. So don't be surprised if you've invested quite heavily in altcoins and you're seeing the rest of the market, but yours is sitting flat and still. That's a risky take, being exposed to some of those lower, more riskier assets. The liquidity may not reach them until a bit later in the cycle. So
cool. Nice segue, because we're going to talk about liquidity now. You're mentioning the US inflation rates, cooling off, coming down and trending in the right direction. What does this typically mean? It typically leads into central banks cutting interest rates, right? Typically, high interest rates means borrowing money will become more expensive. Mm-hmm. Lower interest rates means it's cheaper. So what happens when central banks around the world cuts interest rates? It means people are more likely to borrow money, meaning they typically have more cash on hand, and then also risk appetite increases. So investors seek assets with higher risk rather than your typical low risk assets like treasury bonds or anything, just keeping your money in cash. So why is this important? Because we work in crypto, we love crypto. Crypto and Bitcoin is considered a risk on asset. So typically this asset class fares well when interest rates are lower. But look, we've got a little stat here, a little Twitter post that shows that the interest rate cuts have already started to begin. So it shows like how many central banks around the world have been cutting interest rates since 2001. And as you can see, in April 2009, obviously after the global
GFC,
the GFC, global financial crisis, heaps of banks started cutting interest rates. So that was a high of 76, and that came down really steeply. The last time was in May 2020, when obviously we had the COVID crisis and everyone was panicking everyone was going to pandemic mode where everyone was locked down. So they were like, okay, how do we keep the economy stimulated? So they cut interest rates to essentially zero. That obviously led into inflation. But now we're at a stage where they're cutting those interest rates again. And so we're not at the highs that we saw in 2009 or 2020, but we're at about 35 global central banks cutting rates. And then I think we'll start to see more central banks like the US and like Australia who have been a little bit more conservative in their approach.
Absolutely. It's a really, really good chart.
And then what does that typically mean? It means more liquidity comes back into the market, as you always refer to, Pav. Mm-hmm. We need liquidity for a flowing, thriving crypto market, typically when things are going really well. And this chart shows that liquidity is trending in the right direction. The last big spike we saw in liquidity was in that 2020 COVID crisis, where they just pumped money into the economy around the world. So it was a huge spike, everyone's spending money. That's when, tech stocks and crypto did really well, and obviously things came down when they increased interest rates. But now we're seeing the liquidity trending in the right direction, and it's at a pretty healthy stage. And I'd say it will likely get higher, particularly if the US drops interest rates and other countries like Australia do as well. So I think that's my personal opinion. Heading into the end of the year, Q4 is looking like a good quarter. Like in the past. We've seen Q4 be pretty good, especially in halving years. So if you look back at Bitcoin's performance over the years in certain months, August and September, so we're in August now, always pretty boring months. Like August on average, or if you're looking at the median, always pretty flat. Same with September, is like on average down 6%. But then if you look at the last quarter, so you're looking at October, November and December, you're looking at an average of 15% up in October, 40% up in November, and 9% up on average in December.
And that's Bitcoin all time as well.
Yeah.
Even in outside of bull market conditions.
So that takes into account the years that are the bearish years. Yeah. So all things are heading in the right direction. Obviously, nothing's guaranteed in this world. Something could happen, and the economy might not be in a good enough state for crypto to flourish. But
seems like a lot of bad things happened recently, and we've hopefully seen the worst of it.
Yeah, but you never know, right?
No, correct.
Like
Black Swan could just be around the corner.
We're seeing Warren Buffett, selling off more stocks than ever to hold more cash. That's
but
typically...
we talk about this. What you see and read in the news, it's usually yesterday's news. Like they could have already reallocated. You don't know.
Yeah, that's true. That's true. But you'd think that would have come out. All that stuff's pretty public these days. So we'll see what happens.
Yeah,
but typically that means, I think you described it as a flight to safety.
Mm-hmm.
So obviously having cash is more of a risk adverse approach rather than holding it in stocks or anything like that. So I think it's important to look at both sides of the coin when it comes to these things.
No, I love it. And seasonality is a really big thing that everyone can follow. Like we're using cryptorank.io here to break down, price month by month. But even if you're sort of confused on, how to map and track the markets, just look at very simple things like this, because the globe does sort of move again to that graphic you sort of linked to earlier, the image from Cross-Border Capital, which shows the movement that they track, the movement of liquidity in the market. So we're talking cash, we're talking credit. Mm-hmm. Usually when times are exuberant and money's easily available, that's when the markets have performed the best. So even if you can't pick what to be in, at least you can sort of track, what's the general direction of the market at least. So it's a really good graphic, that one.
Love it.
So a little bit different as well today. We thought, we've done the top movers for quite some time now, but we thought we'd move more into focusing on what are some of the big institutions doing. So I know we've had the Bitcoin ETF release, we've had the most recent Ethereum ETF release. What's been the net result of all that activity? Because at the end of the day, we've seen price action do not too much, to be honest, for the last few months. Mm-hmm. So do they still care? We kind of have heard less and less of it in the media. So I thought we'd spend some time today just sort of running through what are these guys doing. Because at the end of the day, it's the institutions that have the substantial capital. They're the ones that are talking to investors to try and give them ideas of where to park their money, as we move into this risk-on environment globally. But, it's always a more methodical, strategic, there's a plan. It's not a quick paper hands, I get in, I'm scared, I get out. It's usually more of a longer term commitment for these guys.
They don't make decisions based on emotion. It's all highly researched, highly, a lot of strategies go into this. So.
Yeah, and it's all risk planned too. So they understand that these markets can whipsaw 20% in a week. That's an understanding that hopefully they've built into a lot of their models. And I have seen some of their documentation. They do call it out. Mm-hmm. Even 1 to 3% of what these guys hold under AUM is going to move the market, as we're about to talk about. So this is a great chart showing the total ETF cumulative flows in US dollars from all the different ETF products, specifically in the US.
And this is Bitcoin. This is not the Ethereum ETF.
That's right. And it's just in the US too. So we do want to acknowledge that there are obviously other products out there. There's some in China, throughout Europe as well, in Australia as well. But the overall trend has been up and to the right. Okay. The one to call out here is there has been a specific product, the GBTC or Grayscale Bitcoin ETF, that has been bleeding this whole time. But if you look into the details, this product, it used to exist as a private trust that you could invest in through things like OTC, but it has inherently higher fees. So there's almost maybe a flight to more better, priced or weighted and fee orientated products, which the likes of, we've got iBit here being leading the way, the BlackRock product, currently sitting with $20 billion under management. These are just staggering sort of facts and figures. So, if we look at this just on quarterly snapshots, the total amount of Bitcoin in these ETFs cumulatively was $7.7 billion. We sort of fast forward again to the end of June. We have $15 billion, and currently we're seeing $17 billion locked up in these ETFs. We'll say locked up, currently allocated in these ETFs. So while there has been ebbs and flows as to how these products are moving, if you took a moving average and laid it out or drew a line of best fit, it's going at a pretty slow slope to the upside.
We're just looking at those total net ETF flows, which takes into account that Grayscale product, which people are selling off. Mm-hmm. It's still, trending up and to the right. So obviously not as quickly as some people would have liked. But at the same time, I think it was one of the most successful ETF launches of all time. And it's only been a few months since launching in January. So it's been really positive so far. And of course it did have that impact when we first launched, and I think Bitcoin hit new all-time highs.
Correct. And that's when you can see like there was the most aggressive amount of buying. And again, like we talked about this on the podcast too, when we did see potential slowing down of the ETFs, we could see the market slow down too, because it was definitely a sentiment piece. I was trading in that period.
Yep.
Everyone was looking at when the data releases were coming out for the flows, and instantly you saw the market react to it.
Yeah.
So it definitely plays a part in the broader picture of even like short-term trading strategies for the average punter, seeing what the more larger guys are doing.
But Pav, I want to know who's actually buying these ETFs, because we talked about it. The ETF's going to open up a new avenue for institutions to invest in Bitcoin and other cryptocurrencies potentially. But who's actually buying it?
Well, the two biggest is Millennia and I can't say the other one, Susquehanna. Is that how you would say that?
Yeah, I'd probably say that. Yeah.
Yeah. Both holding close. Well, one's at 1.15 billion, and the other one at 0.9 billion US dollars. Some more, I guess, homegrown names that we might be more familiar with. Goldman Sachs currently holding 0.4 billion dollars in their accounts, and we also have the likes of Jane Street holding 0.71 billion dollars.
Yeah.
There's also been a sleuth of new institutional buyers coming into the space, such as Paul Tudor Jones. They're currently adding about $30 million worth of exposure in the IBIT product. Mm-hmm. So again, even like a big name like that, that's only 0.15% of their total AUM that they look after for their clients. But you know, the one thing that people may not understand about the institutional space is it's not a case of these investment funds are necessarily doing it for themselves. They have a whole grade of wholesale and institutional investors that choose to bank and partner with these entities. They're receiving insights and recommendations and prospectuses that, hey, Bitcoin's something you should look at. So it's more of a adoption story outside of just these banks as entities themselves. They're doing almost a sales gig selling Bitcoin to their clients as well. Yeah. So it's a broader adoption piece.
Well, one thing that, one of the institutions that's not listed on this is JP Morgan. So JP Morgan is the biggest bank in America, if I'm not mistaken. And their CEO, Jamie Dimon, has come out and said before that if he was the US government, he would ban Bitcoin, which I don't know how you would do that.
It's a funny comment all around.
Yeah, like if you look on their balance sheets, they're even holding the Bitcoin ETF. But it goes to your point where, they're actually buying on behalf of, some other institutions or even individuals. So it's not, I don't think he has a full say of what they can and cannot invest in. So he's like, they're just doing it in the sort of doing it based on what their clients are after, right?
Yeah, and any good sort of wealth manager is looking at ways to generate returns, like through beta or even through alpha. Like these are new ways to get access to volatility to products. As we talked about, and going back to that liquidity graph that you pulled up before, it's we're at this massive multi-year swing low just coming out and into a period where liquidity will be plentiful. So even to hold a small percentage of an overall larger portfolio, I think they're sort of selling enough of a narrative, obviously, that a lot of people can't afford to not have this sort of product with accepting the volatility that it does come with it in their portfolios.
And we've got another graphic that shows like a big increase in the number of institutions owning or adding the BTC ETFs to their balance sheets in Q2. So in Q1, we saw a big influx. Obviously, that's when it launched in January. So we had 937. But in Q2, when things were a lot quieter, we saw an additional 262 unique institutional owners. So just going to show that's growing. It's trending in the right direction. Will be interesting to see we're in Q3 now. Things have been probably even like less volatile than in Q2. So see if there's still that demand and more institutions onboarding it.
It's interesting. But again, like I think this, we've hopefully done it justice just to show that, while it's been out of the media, it's still definitely of interest to the people that obviously move most of the money around the world. So
yeah, exactly. And we typically call that smart money, right?
Well, let's call them smart money.
If it's not in the media, it doesn't necessarily mean people aren't interested in that people have teams working but night and day to make sure they're getting a good return for their
finding
clients.
It's all about opportunity.
That's it. And now quickly, we're just on the topic of institutions. So obviously we're talking about institutional investment into the Bitcoin ETFs. That's like sort of the main piece of this pie, but I also want to touch on like big companies who have Web3, blockchain or crypto initiatives going for them. So last week when in our gaming deep dive, we saw some of the titles or some of the companies that have got their own sort of Web3 gaming initiatives going, or even if they're starting to look into it. And there was a huge list. We saw the big names, Microsoft, What else did we see? Epic Games, all the big titles. So, but then again, there's also major, Web 2 and just legacy brands that are launching their own Web 3 initiatives. So the likes of Nike, Microsoft, Visa, PayPal, even here in Australia with like ANZ Bank, they've teamed up with Chainlink to do their own. ANZ issued stablecoin across chain to purchase nature-based assets. So it was like a sort of cross-chain interoperability test they did with Chainlink there. But I think a lot of people don't hear about these stories because they're not. They sometimes can be a bit technical, a bit confusing, not the most exciting thing in the world. But a lot of these brands are putting forward resources and capital towards developing out these initiatives, or even just investing in them directly. So it's good to see that there's we're getting that adoption, not only directly but indirectly through supporting the industry and the space.
No, it's good to see. It is great to see.
Yeah.
I guess we should touch on some news, mate.
Yeah, got a couple of news headlines. So I don't know if we can do an episode these days without getting into the politics.
Yeah.
We've tried to steer clear of the politics to some degree, but
I think this is an important one.
Yeah, it's played a big role, particularly this year. So obviously, Kamala Harris is sort of the nominee for the Democratic Party, overtaking our man Joe Biden. So she actually launched a campaign, or the Democrats launched a campaign called Harris for Crypto. It was basically to, equalize all of Trump's sort of
everything he was standing for.
Yeah,
trying to win over the voters.
Yeah,
really.
trying to win over the voters. So she took out like that point of Trump's campaign, him supporting crypto and trying to get the crypto vote. But look, she's just released her political agenda for this presidential campaign, and there is not one single mention of crypto or Bitcoin, which is a little bit concerning, but purely because obviously like the current stance of the Democrats is I don't know if you could say anti-crypto, but it's not.
It's not priority.
It's not. Yeah, crypto is definitely not a priority, and obviously we've seen the SEC go against it in a lot of cases. So the fact that there's no sort of change in stance or change in policy, if she's to become president, is a little bit concerning for us in the crypto industry. Also, there's rumors. This is not this is not confidential or rock solid anywhere, but there's rumors that.
Do I smell an intern?
You could be. There's rumors that Gary Gensler could be stepping down from the SEC chairman position and be promoted to like a treasury chairman position. So
he's been working hard.
Interesting to see sort of how that happens. I know from our perspective, like, when you hear the name Gary Gensler, it puts a bit of a sour taste in your mouth just because everything he's sort of stood for when it comes to crypto. So how do you feel about him still being in a position of power?
No, don't really change anything. Like, I'm pretty cynical on the politics front. It's all like who's paying who in the background as to what happens in that space, you feel. But yeah, like, I don't know enough about it, to be honest. I feel like the industry will progress the way it does. Like, if the US doesn't pick it up, another country's going to run with it and champion it.
That's it.
We're already seeing the European legislators making some big moves.
Yep.
Giving some definition and some framework around stable coins. Like, that's a very contentious piece, but it's also where, they're labeling it as e-money. Like, no other country is like anywhere near sort of the steps where Europe is right now. So I think irregardless of what happens in the US, Bitcoin thankfully is decentralized. It's global. Yeah. There'll be other spaces that excel. So.
And they'll come around eventually, you'd have to think.
Oh, yeah. You think so? There's money to be made. They'll come around.
But look, the presidential race seems to be very tight at the moment if you're looking at Polymarket, which you've just educated me that it's actually a crypto.
I said I wasn't sure, but I know there used to be one, so I wonder if it is the same. Only because I remember looking at it a long time ago.
Yeah.
But I could be completely wrong.
So Polymarket.com, I think it's like a betting website where you can bet on the presidential race, but it looks tied up. Trump at 49%, Kamala at 50%, so not really much to take away there.
Finish up, I thought this was a good piece. The Ton Network, which the Open Network, we've talked quite a bit about them because we both sort of see that the fact that Telegram is putting forward their own Web3 wallet, their own on-chain ecosystem, one of the biggest apps in the world. I think it's very understated, the impact that just improving the usability and access to crypto as a product or as a service will bring for the industry. They have partnered with Pyth Network, which we saw, I guess, quite a bit of action on earlier this year. More of that Oracle service. You could think of it as a Chainlink, another competitor across different chains.
Chainlink of Solana. Is it just on Solana?
I thought it was again, like Ton Network is sort of using it too. So it's sort of expanding its sort of, I guess, offering across more chains. But yeah, definitely was on Solana as a highlight. It was an airdrop as well. They're looking to develop on the Ton Network. So
to break it down in simple terms, that's basically Pyth is going to give like a real-time data feed for developers on the Ton Network, developing decentralized applications. So it could be...
it's mainly like prices, making sure if there's like an exchange that runs on the Ton Network, that the pricing will be sort of mapped to something that moves like at accuracy.
It could, like in theory, be anything. It could be 100%. The temperature of the weather in Brisbane. Like data like that is crucial for some apps potentially. So it's just about getting real time accurate data.
Yeah, anything to do with the smart contract. There's usually just a lot of degrees, like some sort of Oracle element where a price or a time is being mapped in. That's where that sort of comes in and helps provide that service. So good infrastructure. Again, like its usability, what it does to Pyth's price, we don't know. But again, it's just showing that it's got a bit more staying power.
Ton has been hitting its strides this year. Like it's one of those ones that kind of flew under the radar and then out of nowhere just absolutely nailed it. Largely in part to its sort of collaboration with Telegram and being integrated there.
But yeah, you're nailing it, because I mean, even while the whole market's been sideways, like I think this one has rebounded, probably not the most, but it's one of the ones that are leading the way. It's up 47% since the recent lows. So it's good to see.
Coin, one to keep an eye out for. Hey,
that's it.
Cool.
I think that's a wrap today. Hey,
that is a wrap. Yeah. But cool, guys. If you want to let us know what sort of narrative deep dive or ecosystem deep dive you want us to touch on next, we did gaming last week, but we're keen to do more of those and provide you guys, juicy insights there where we can. So please let us know on socials and make sure to check out our YouTube channel or our Instagram to leave a comment.
Yeah, but we look forward to the weeks to come. I personally am very excited. Like, it's been boring for a very long time, but the early signs, I still think I think you said like that seasonality element means October, November, December is probably where things might start to look a bit better. But it's all got to start somewhere. So I wouldn't be surprised if we start to see some sort of, if we do see that upside, a bottom forming in the next 4 to 6 weeks, which is pretty exciting.
That's it. And you want to try and position yourself best for when the market's going to do it.
It's perfect time for the DCAs like me. So just averaging into positions in these conditions.
Yeah,
so
absolutely.
That's good.
Cool. Thank you, guys.
Thank you. Bye.